Hello. So this is our continued lecture for income statement and a statement of financial position for sole traders. We already have covered John Cosway as our first question. Then we did Hallward. There is one more question that you have to do all by yourself, and this is the fourth question in line. And the question name today here is Celia Davidson. In today's lecture, our focus will be on the income statement and SoFP sites adjustments, especially the new adjustments. And you have to do the income statement and SoFP all by yourself. So what I'm going to teach you in today's class will be the adjustment, and especially the newer adjustment that we have never encountered before. So let's move to the question, and I hope that you will have a better understanding now, and you can extract income statement and SOFP all by yourself, and you will only need to know certain new adjustment that I will have pure focus on in today's lecture. So let's move on. I'm gonna share the screen, and you can see the question. Yeah, but first of all, let me introduce you to the new question that we are going to see today. It's on page number 131, students. It's on page number 131 of my book 2. The question name is Celia Davidson. So if you have my book, you can go on to that page and you can find out that question, Celia Davidson. And in case if you have not got any book right now, so you can just simply work with me and seeing on my screen. So here we go. So now you can see the screen and you have the question in front of you. You can see all yourself that there is a question named Celia Davidson is in the import and export business. The following balances are extracted from our books on 30th September 2006. So students, 30th September 2006 is the year-end date for Celia Davidson, right? So this is her year-end. You may find there will be things that like accrued, that things like prepaid on the same date. So we have to adjust all these things with some newer adjustments as well. So here we go. In the question, we can see sales, we can see carriage on sales. So there is a new word. The examiner has used the new terminology called carriage on sales. Students, this means simply carriage outward. So if the examiner is going to is trying to confuse you with this, carriage on sales means carriage outward, and you all know carriage outward is your expense, right? So carriage on sales is carriage outward, and it is a part of your expenses. And move ahead. So rest of all other things are quite similar. Other than that, for the first time, we have some previous doubtful debt as well. So in our last questions, we have never encountered any such thing that we have been given the previous year's doubtful debt as well. We were just supposed to have some creation cases, but right now we might face some increase or decrease cases as well. So let's move on to the adjustment to find out that what really is waiting for us in the adjustment side. So students, let's move on to the adjustment number 1. Here we are. This is a very common adjustment, and we are encountering it since the early days when we were making income statement and SFPs without adjustment. We still had that particular ending stock adjustment, and we know how to deal with it. So I'm not going in detail. You know that it will be subtracted from cost of sales. It will be there in your SOFP as well. So I'm just not going to pay attention to this. And then we will move on to adjustment number 2. If you can read adjustment number 2, you are going to find it quite familiar if you are in line with our series of lecture. Yes, we have done it in our last question. Yes, in the car ward question, right? Where the owner took goods for his personal use. But again, I'm going to make a pure focus on that adjustment. And students, the owner has taken, let's first of all, let's read the adjustment. During the year Celia Davidson is the owner in the business here, took goods costing 1,300 for her own use. No entries have been made in the books. Celia Davidson has taken the goods for her own use. So means owner, if takes something out from the business, you know what it is. Even if it's a car, like an asset, even if it's money or cash or the bank, it's whatever being taken out of the business. Say it is counted in drawings. It's always drawings. So whatever goes out of the business, we call it drawings. That's it. So, but for the time being, let's for the better understanding, let's suppose that the Celia Davidson, the owner here, she did not take out um, goods. Instead, she took out some cash or some bank amount. What shall be done? What should have been done if that was the case? If that was the case, then what we have done is we went to the cash at bank thing here, and we have subtracted that amount. Like for example, here it's 1300, and since it's a drawing thingy, so we have added 1300 in the drawings. That would have been done had it been drawings in the form of cash. But right now, the drawings are not in the form of cash. Instead, these drawings are in the form of goods. And where do we dump goods? In which account do we dump goods? Yes. If you can think of it, and I'm removing it. If you can think of it, you are right that that the goods have been dumped in the purchases account. So let's move on to the adjustment, the correct adjustment, and not supposing anything. So the Celia Davidson took goods costing here, it's 1300. So Celia Davidson took goods 1300 for our own use. So what we are going to do here, students, we are going to subtract that 1300 amount from our purchases. Here are our purchases, and that 1300 will be subtracted. Yes, we have to show the examiner what we have done, right? But just to make ourselves uh, and not to missing that part out, we can write it down here. And since owner took it for his personal use, for her personal use, so it's a part of the drawings and it is increasing on her drawings. So it will be added in the drawings as well. Now you can see that we have done the adjustment number 2, the, the taking out of goods for personal use. Now we'll move on to adjustment number 3. Here we go. Depreciation is here. Depreciation is to be charged on motor vehicles. Yes, students, we are on adjustment number 3 on motor vehicles at 20% per annum using the straight line method. So the examiner is saying to us that depreciation is charged at 20% on a straight line basis. So the method is straight line, and you know that the straight line method is as simple as the straight line itself. So we are going to solve it out here and making it further simple. Let's move on the top and find out what is the cost of motor vehicle. So let's move. While I'm going and searching here, I find out this thing, motor vehicle expenses. Is it the cost of motor vehicle? It might confuse some student in the exam. No, students, this is not the cost of motor vehicle, right? This is not motor vehicle. These are the expenses related to motor vehicle. So we cannot take it. We have to. Okay, let's find out the cost of motor vehicles. Here we go. This is the cost of motor vehicle. We have been given. Here we go. Sorry, my pen was not working. It's now working fine. So here is the cost of motor vehicles. Again, let me find out the percentage. Yes, let's say it should be 20%. Okay, that's very simple. Student, we all know the formula for straight line method. If we are not given any scrap value, so we can just simply take out the cost. Here we go, 15,500, this is the cost, and we have to multiply it by 20%. Since we are not given any scrap value, and yes, student might be confusing it with the life formula of this depreciation. But we haven't given any life here as well. So the method is really simple. Simply multiply with the cost to the rate, and you will have the answer. So 15,500 into 20%. Let's try to find out the answer. Let's work on it. 15,500 into 20%, the answer is 3,100. So student, this is the depreciation that is going to be there in the expenses side of my income statement, and I am done with my adjustment number 3. Okay, now we'll move on to our adjustment number 4, and you can see, if you can read it, wages and salaries 1900 were owing. It's a very familiar um, adjustment for us. Owing, an expense that has been consumed but not has been used as yet. And you all know what we are supposed to do with this. Go to wages and salaries, and what shall we do? Shall we subtract it, or shall we add it? We will add it. Yes, if you're thinking adding it, you are right. So we are going to add here. Let me confirm the amount again, and it's 1900. So my wages and salaries will be added with 1900, and you can make the calculation. And we are done with adjustment number 4. Now we are moving on to adjustment number 5. Insurance of 400. Again, a very familiar adjustment, and we know that we can easily do this adjustment. Insurance is prepaid at the end of the year. So you can think of it in your mind, and now I will do it. Insurance prepaid, what does it mean? It simply means that insurance has been paid but not consumed as yet. So we will subtract it out. So here we go, subtracting 400 from insurance. So you can make the calculation and correctly write in your book or notebook, whatever you are using. So we are moving on to adjustment number 6. Now students, we are going to face 2 new adjustment in today's question, and it will consume of our time as well. So the first one, can you read it? The provision for doubtful debt. Can you read it? The provision for doubtful debt is to be maintained. For the first time, the examiner has used this word. Okay, so since we are doing these questions, we have encountered it for the very first time, the word maintained. You can see this was never being used before, the word maintain. So the provision for doubtful debt is to be maintained at 2%. So let's make the calculation here. So separate space for this. First of all, we'll try to find out what our debtors are. So we'll go into the question and find our debtors. It might be trade receivables. In some question, here we go, debtors. Here we are. My debtors are 38,000. Okay. My examiner says 2% will be my doubtful debt. So what will be my doubtful debt should be as per the calculation. So I'm going to place it. I'm going to punch some numbers onto my calculator, and we'll try to find out the answer. 38,000, and that will be 2%. All right, my calculation says that doubtful debt should be 760. But students, for the first time, we have been given our previous doubtful debt as well. So we will go on to the question and we'll see how much is the amount of our previous doubtful debt. Students, you can see here. Okay, let me show you. The pen is not working. Yes, here I've just circled it out. Okay, I'm going to change some colors so it can be identified easily. Here, so these are my provision for doubtful debt. My previous provision for doubtful debt are 360. 360. These are my previous doubtful debt. Students, my doubtful debt are already 130, 360. So these are my already doubtful debts. What I'm supposed to do? What case is this? Okay, my calculation is saying that doubtful debt should be 760. That is the 2% of 38,000. What I've already made into 360. My calculation is saying 760. My previous account is saying I already have 360 as my doubtful debt. Which case is this? Are we supposed to increase our doubtful debt, or are we going to decrease them? Let's think again. The calculation is saying doubtful debt should be 760. What I have only 360. What we need to do? We need to increase it to 760. How much do we need to pour in? We need to pour in, we need to put in 400 more. So students, this is a pure case of increase in doubtful debt, and that increase will become a part of our income statement. Student, we remember that only the increased amount will go into expenses section of our income statement, and the increased amount is, yes, the 400. Here you go. That way, that 400 only will go to our income statement. Fine, we are done. That's really good. You can keep on it. You can reflect upon this, right? Because it's not that simple. You have to remember this. Okay, now we will move ahead and we will do the last adjustment. This is quite a complex adjustment and a very, very weird adjustment in itself, but we have to do it. Let's find out what it is. Celia Davidson made a long-term loan, $5,000 at 3% per annum to the business on 1st October 2005. So that is Celia Davidson made a loan to the business. The loan amount was 5,000 and the interest rate was 3% per annum. And that happened on 1st October 2005. That was the start of our year, I guess, and it's ending at 30th September 2006. So it will definitely be started at 1st October. Okay, fine. At the start of the year, Celia Davidson. Who is Celia Davidson? She's the owner of the business. Okay, and she has made the loan to the business. The owner herself is making loan to her own business. This is quite strange and it's quite weird as well. Okay, fine. That used to be a part of our questions um, back in those days. This was included in error in capital. Okay, so Celia, who is the owner, has made the long-term loan to business, and that long-term loan uh, has not been included as a loan, but instead it has been added into the capital. That's what being said in adjustment number 7. Celia Davidson made a long-term loan, that is $5,000 at 3% per annum. Okay, on 1st October 2005, that is the start of the year. This was included in error in capital. All right, so here we go. So the first things first, if okay, I know it's weird. I know the owner is making loan to her own business, but this is what it is. We have to separate it out. If it's loan, we cannot include it in capital. But she says, but the question says, this was included in error in capital. So first of all, the very first thing that we do is we have to take it out from capital. Yes, we will subtract the amount from capital. It should not be here. 5,000 was the loan. It was not the capital investment. Okay, we have subtracted out. Here is the capital and we have subtracted it out. And students, we are not going to forget that it's a long-term loan. So it will be a part of our LCL, that is long-term liabilities. So it will go here as well. But thing does not end here. There is a one last line as well, and it is really important. Okay, let's read. The interest has not entered in the books. If it's a loan, there should be an interest as well. And since this loan has been given for the whole year interest will be calculated, and we have to find the interest as well. And since it has not been recorded, it has not been paid, it will be a part of two things. It will go into our income statement as an expense, and it will also form part of our balance sheet. Yes, our balance sheet, since we haven't paid the interest, and interest not paid is like an interest owing, and interest owing is a part of our other payables. Yes, we have wages owing, right? 1900 in the question. Yes, similarly we have interest owing as well. So we will sum them up both, and we'll write in our balance sheet as other payables. So let's solve it out. We have 5,000 as a loan and the interest rate is 3%. Okay, so what is the amount? Let's find it out. 5,000, 3%. I guess it will be 150, but let better calculate it. 5,000 into 3%. Yes, it is 150. So that 150 will be a part of my income statement as an expense, not to forget. Yes, yes, interest expense, not to forget. When you will make an income statement, you will write the interest expense as 150. All right, but that's not the end of the game. It will part of my balance sheet as well. It will be a part of my balance sheet. Yes, where are we going to put it? Yes, it will be there in the current liability section. Where in the current liability? Yes, we have something named as other payables, where we put on all such things. So students, these are the adjustment so far. Now we have done it all. Now you can easily go into your question and do your income statement and your SOFP. Since all the adjustments are done, the question will be very easier now, and you can just jot down everything. You can be very sure, you can be very alert to all those adjustments. Make sure that you're gonna insert the depreciation, the doubtful debt, and the latest one, the interest that we have just found out. So be mindful of all such things and draw your income statement and SOFP, um, and make sure that things come out correctly. I hope everything will be very clear to you in these adjustments. Um, you can, if you need to take a screenshot of anything, I'll just pause it here for a moment, and then I'm going to go down for more, and I will take the picture of it as well, and will save it for you. You can access it to me through any contact you have for me. So that's it, students. uh, this is the presentation I made it for my student who could not take my class. I hope it will be beneficial for many students to come, inshallah. So here it goes. It is for you, who and I hope I have made it in a very journal way, so that it will be useful for any other student as well if they miss any of my lecture. So thank you so much if you are here, and it's time to go, and I'm going to see with some other lecture as well. uh, so here we go. Have a good day to you all. Allah Hafiz.